The Fed raising rates a quarter percentage point, bringing the federal funds rate to a 22-year high. And Fed Chair Jerome Powell leaving the door open to another rate increase this year. Joining us now is Nick Timiraos, the Wall Street Journal chief economics correspondent. Nick, great to have you here. You were in the room with Fed Chair Jerome Powell yesterday. Got a question, too. I'm curious to get your perspective on the messaging from Powell yesterday, because he was asked time and time again about how the Fed is looking at future rate hikes. And he did say that the Fed can afford to be patient, but also left the door open to further rate hikes. Is that what how do you think he messaged that to the markets, and whether or not it was clearly received?
Well, I think he was pretty clear that he wants to keep all of his options on the table. And so that's what he did yesterday. Of course, markets think the Fed is done raising interest rates, as do many, but not all of the Fed watchers on Wall Street. And Powell, I don't think he said anything to explicitly validate those views, in part because it's probably too soon. We've only had one really good CPI report. By September, maybe we'll have two more. And so it would be easier then to say, well, the last three inflation numbers have been much better than before. But he also, I don't think, sounded like somebody who strongly disagrees with the idea that the July rate increase might be the last one. The Fed says it's data dependent. And so, the next batch of data will be important. And then I think there's another question of whether that rate increase, if there's going to be one, has to happen in September, or whether you could do it in November. Powell, again, tried to keep all the options on the table, but I didn't hear anything that would suggest a lot of urgency to raise rates in September. If you think you're going to have to raise rates, but you want to be a little patient, as he said, then you could do that at the meeting in the fall.
Nick, there's been a lot made of the divisions that we're starting to see form within the FOMC. I think the Fed chair yesterday said there's a range of views on the committee, and you've sort of broken it up to, I think, three different camps. You were talking about sort of a team transitory optimist. There's the hawks on the other end. Do you get the sense that with the latest data coming through, that divide is starting to narrow on the committee?
It's a good question. I don't think we really know yet, because we haven't heard from a lot of the committee members since the June CPI came out in the middle of July. So we'll tell. I mean, these folks usually hit the airwaves after the meeting ends, next week. So we'll hear from more Reserve Bank presidents. Right now, you have at least a loud minority that have been pushing for another rate increase, maybe in September. But I don't want to overstate how large that group is. We're talking about a couple people, maybe more, who will speak up. You had one Fed president, Raphael Bostic, before the meeting saying he didn't think they needed to raise rates anymore this year. I think that leaves kind of a larger undecided center, and that center group, could probably lean towards another increase in November or December if the data warrants it. I think the big unanswered question for now is how the Fed would react if the data came in a little bit better than anticipated, both on economic activity, but also on inflation. Those sort of cut against each other. If inflation's getting better, maybe you don't have to do as much. But if the economy's not slowing down as much as you thought, maybe you do. So that was what I asked Powell about yesterday. He didn't really answer the question that clearly, but he did seem to suggest maybe inflation is first among equals in determining the next move. So we'll see.
Well, Nick, what do you think the basis then is for a pause? We were talking to former Atlanta Fed President Dennis Lockhart yesterday, and he was talking about the fact about whether or not the Fed is going to focus on outcomes or whether it's going to focus on outlooks and what would be sufficient for that pause. How are you thinking about that?
Well, it's interesting because it's not as if, at least to my ear, we're arguing about too much more than another quarter point. Maybe there are a couple of people who want to do 50 basis points more. So when you get to the end, or when you think that you're at the end of a tightening cycle, it's natural for there to be more disagreement. But the stakes aren't, I wouldn't overstate the stakes here. We're talking about maybe one more increase, maybe two more increases, maybe no more increases. I think the difficulty is probably going to come later. And that's when you're holding interest rates and you're seeing more weakness in the economy or you're seeing more of a slowdown. And I was a little bit surprised, how much of the discussion yesterday Powell had about the strategy and the tactics around cutting interest rates. He had sort of avoided talking about cutting rates before. That was, of course, when the market was always moving up expectations of when the cuts might happen. Now that the cuts are mostly priced out for this year, maybe it's easier to have that conversation. Because at some point, if you do care about inflation adjusted or real interest rates, and you're getting inflation to come down, then, and you keep raising nominal rates, or you just hold nominal rates steady, you're going to have real rates rising. And so then the question, I think, is going to be more difficult. What kind of evidence do you need? Do you need 3 months or 6 months of 2% or 2.5% annualized inflation before you start cutting? Are you cutting with the economy in a pretty good growth environment, or have things really slowed down a lot? We don't really know what their reaction function is going to be around cuts. And I'm not sure that they do either, because this isn't, a high inflation environment isn't something that the FOMC's had to deal with for a long time.
Yeah, a lot of economic data still to parse through between now and September. And of course, the Jackson Hole Symposium sandwiched right in the middle. Nick, always appreciate you being on the show. Nick Timiraos, the Wall Street Journal chief economics correspondent.